Nesson, the rand's volatility really confusing today, almost 2% lower this morning, and now we're below 16 rand against the US dollar.
Yeah, absolutely. It's just like the stock market. We opened up quite low this morning, and it fell in the morning session till about 10:30 or so. And subsequently, we've had a strong rally, I think, very closely tied with what's happening in those US elections. I know that a lot of people still seem to be thinking that Joe Biden is going to, is going to win, but it's not as obvious as what the market anticipated. Initially, we believed, that it was going to be a blue wave, and then they lost Florida. It seems now we're going to have a Senate that's it's not entirely clear whether that's going to go Democratic or Republican. And of course, the stock market responds to these things. So you saw that when the NASDAQ opened, it opened much stronger in anticipation of perhaps a more stronger Republican showing, which is going to be good for regulation, or lack of regulation rather, of big tech. And generally a risk-on sentiment being put across the board as markets are currently reflecting.
Right. Now, this volatility will make the lives of importers and exporters here in South Africa very difficult at a time when we're trying to get the economy back on its feet. Isn't that right, Nesson?
Yeah, so I think as far as importers are concerned, a strong currency is always a good thing. We had a very little economic or much reduced economic activity this year, rather, even when the rand weakened. But I think now that the rand is going to get a bit stronger, it certainly helps out importers. Exporters, particularly the miners, have been helped by buoyant dollar prices for a lot of the commodities. But of course, a stronger rand means, less rand receipts after that conversion is done. So, the rand currently, is at its strongest level since the meltdown that we saw in early March, just prior to lockdown. So it looks like we might be, heading towards the year end, with a much stronger currency than a lot of people anticipated throughout the course of this year. It's actually a good thing, I think.
Right, and then just to focus on global markets in general, we've spoken about the impact that the election is having on market movements, but how much are we seeing the resurgence of COVID having an impact, particularly in Europe as well as in the US? Surely this COVID uncertainty and the lack of significant action is also having an impact on movements.
I think very good point. I mean, the UK is going to vote later on today on possible a lockdown, again a second lockdown. Infection rates have spiked in Europe in the last few weeks. We all know about that. And, without these sort of measures being taken, hospitals and healthcare infrastructure is going to be, heavily burdened. So I think, certainly a concern for markets. But at the same time, we are quite close, I believe, towards getting a vaccine. And I think the markets are also taking that into consideration, whereas we might, endure another lockdown. The duration of that lockdown and the severity of it might not be as bad as what we had earlier in the year, when there was, no foresight of a potential remedy for the disease.
Great insights there. That's Nesson from Sasfin wrapping up the markets day with me this afternoon.